Welcome back to the Latitude Podcast with 43 North. I'm Arden, Manager of Investor Relations and Partnership here at 43 North, and I will be taking over as your host today. If you're new here, 43 North is a startup accelerator program in Buffalo, and we invest $5 million annually into seed stage startups. As part of our programming, we welcome VCs from around the country to Buffalo to engage with our founders through fireside chats and one-on-one meetings. Today, I am thrilled to welcome Landon from Drive Capital to Buffalo and to Latitude. Welcome, Landon.
Amazing. Thank you so much for having me. And to your entire team. I've had an amazing day so far, so thank you.
Yeah, tell us a little bit about what you have done today.
Yeah, so we stopped by the University of Buffalo, which I was super surprised, has 30,000 enrolled students, toured the campus, met with one of the heads of the tech transfer office, and spoke about, how we can find ways to keep students turned entrepreneurs in these ecosystems, specifically Buffalo. But it's a lot of the same conversations I have around Chicago. Like, how do we keep people between the coasts? And then I met with a professor who's leading this new microelectronics initiative at UB, which is awesome because we're actively investing in a lot of fun areas of AI infrastructure and sustainable computing, low power GPUs, and semiconductors being one. So it was great to meet with him, and we came over here for a fun fireside chat with a few of the new cohort members.
All right. Jam-packed day for you. Yeah. We'll predate that. Tell us a little bit about your journey into venture and how you got connected with Drive Capital.
Totally. Yeah. So I am from the Bay Area, born and raised, Oakland, California. Moved to Chicago for college. I went to DePaul University, started there in 2016. Didn't know much about Chicago or the Midwest, to be frank. And it was just always sort of the flyover city and never a place, folks vacation from California, but hopefully we can change that. And yeah, moved to Chicago, was just amazed at mainly like the architecture to begin with. Like, I was just in awe with all the tall buildings and the companies that came from Chicago and just the history of the Midwest, and wanted to quickly become acclimated with everything that the city had to offer. So started interning a bunch and working throughout college. Graduated with 10 internships under my belt, like different media companies, startups, even, law firms, just trying to figure out what I liked and what I didn't like. And also it was so much fun to bring that experience back into the classroom. But yeah, one of the roles that really, shaped my career trajectory, specifically in startups, was with Cameo. The famous startup, no pun intended, where you can get customized and personalized videos from your favorite celebrities, influential people, actors. Started there pretty early, right when they left their incubation space and moved into their own office. So being there, when maybe there were, I think, 30 of us, sub 30, until about 150, was an amazing journey and ride across a few different roles and positions. That internship rolled up into a more full-time role as well. So that was great. And I think that was sort of my first spark into the innovation economy of Chicago.
That's great. And Drive is focused on exploring the greatness in our backyard and cultivating a greater lens for opportunity. Yep. Can you tell us a little bit about their philosophy and what the big picture is there?
Yeah. So we believe, and we know for a fact, that great companies can be built anywhere. You don't have to just be in one or a few concentrated hubs or areas. So a lot of our DNA is actually, from the Valley, Silicon Valley. I shared my personal story moving from the Bay to the Midwest, but same with our two founders, Mark and Chris. They used to invest at Sequoia Capital. A lot of our partners used to work or invest in the Bay and Silicon Valley. And they noticed over and over, specifically Chris and Mark, that Sequoia would never consider or look at companies between the coasts, where you have amazing institutions, wildly ambitious talent, great industries to capture and go after. In fact, when Chris was in his first ever partner meeting at Sequoia, they had found a company that they were obsessed with, but they ended up not investing because it wasn't a bicycle distance away from the office. It wasn't in San Jose Road. It was in Petaluma, California, which really isn't that far. So that was the first aha moment for Chris, that you have so much amazing opportunity that's just being overlooked, ignored. So they sought out to create the premier venture firm between the coasts. And when we started Drive 10 10-ish years ago, a little over a decade, Drive was the largest first-time fund in history. Our first fund was around 250, and it was strictly Series A deals in Columbus, Ohio, where Drive is headquartered and based. That's the mothership. It was in Columbus, Chicago, and Pittsburgh. And now, a decade later, we are the largest non-coastal venture firm, $2.5 billion under management. And not only do we just do Series A, but we also do pre-seed all the way to pre-IPO. So we can invest in the entire life cycle of a company with the idea that great talent and great companies are in our backyard.
Love what you said too, between the Rockies and the Hudson. It helps put a picture in people's minds about the opportunities that are outside of just the specific coasts.
Totally. Yeah, we call that the driveway. So we're looking anywhere between the Hudson and the Rockies. And there are some, outliers, of course, but for the most part, there's just so much opportunity that exists here. And great companies have been built between the coasts and will continue to be built between the coasts, especially with this emerging new transformative technologies that we're really passionate about investing in.
Yeah, absolutely. A little bit earlier during the fireside chat, you referenced some similarities between 43 North and Drive. So we know collaboration between investors and founders is crucial to startup success. What are some tactics or ways that Drive leverages its network to support your founders?
Totally. And it's just that. And I think that's the similarity I see. Like it's more than capital. Like the investment is huge and very important. It pushes companies forward, but post investment, what is the platform being built that you can, put in place for your founders? And that's something that we really believe in. So in Chicago alone, just speaking from my personal experience, like I'm really focused on helping our early companies break ground in Chicago. So helping them source their first few customers, helping them source talent that maybe can join their early stage company, first hires, also potential service providers. Maybe they need resources for legal support, design agencies. So there's that. And I also think just the general advice that you can give a startup is very influential, because a lot of our partners, they've seen so many different things. They've worked with so many different companies, and we can keep founders from making, maybe similar mistakes as previous founders that we've seen before. And so having that platform baked in the platform is very important. And also with the talent piece, I just want to, double down into this. Within our new fund, we built an internal talent agency that we can help our founders find executive talent. Any talent, getting them placed within our portfolio company. So that's going a step beyond as well, and something that we really help with. So yeah, I totally agree. Like in today's day and age, you need to find ways to differentiate from other firms. And it's by having this platform that can really support founders beyond, writing the check.
Yeah. And you share a similar methodology as we do here about in-office opportunities, and that the involvement of being face-to-face cultivates a different environment, which helps both the founder and everyone else in the portfolio grow.
Totally. Our belief, greatness happens in person. So that's another thing. Like we have our new Chicago office, which I sort of call the Moonshot Factory, because we're working with some amazing early stage founders, but that's a physical space where our folks can build, hire, and build community. And they have that close proximity to other folks in our portfolio who are doing the same thing, going after different problems, solving for different challenges, but they're all early. So it's nice that they can sort of help each other, lean on each other when they need help the most. So yeah, greatness happens in person. And I think being in person, to build a company in the early stages can be difficult to do, maybe later stage when you get a little more, decentralized teams, but at least early on, you want to have that close proximity to your folks and people you're building with.
Yeah. The companies that we are investing in at 43 North are typically in the seed stage. And I know that is within your realm as well. Earlier at the fireside chat, you mentioned having too much capital is just as bad as not having enough capital. What would you tell a founder in that position is the sweet spot, and how can they configure their way around that?
It's going to depend on, what they're building, where they are in the life cycle of their company. But yeah, the point that you mentioned from earlier, when you raise too much at times, you might start solving problems with money versus actual intellect. And really, it's sometimes better to like have your back against the wall. So I think really finding that sweet spot between, it's going to depend on the company. But between like raising too little and too much, like you want to find the perfect amount. And something I also mentioned in the fireside chat earlier, when you raise, one round, you're technically raising 2 rounds at the same time, because, investors from the previous round are going to want to make sure that you hit on the specific milestones and KPIs that you sought out to hit when you raise that initial round. So making sure to keep that in mind and being strategic that I'm bringing in the right amount to get to the next milestone. Whatever that looks like for the company.
Awesome. I know you touched upon it a little bit earlier too with the talent aspect, but Buffalo's proximity to major cities in the Northeast and its strong educational institutions make it an attractive location. Mm-hmm. How does Drive view the roles of academia and the talent pipelines for fostering the startup ecosystem? Yeah,
I spend time at universities practically weekly at this point. And a lot of my time, visiting Chicago universities and, all the way up to Champaign and just around the Midwest. And, it's cool to see a stat that I share often, like nationally, Chicago is the second top hub for newly graduated talent, new grads, I should say. And then also startup salaries just tend to go much longer and further compared to on the coast. So a salary that you make, working in tech in Buffalo and Chicago, because of the cost of living, because, of just the area in general, like, you're going to be able to use much more of that compared to, if you were in SF. So that's something to keep in mind, as a founder as well, like $500,000, which is what we invest in, it's a significant amount of money, but that could go very quickly on the coast. And you want to make sure that you're, really using your capital efficiently. So maybe you can go after, more top talent between the coasts. And that goes much further versus you need to try and poach from an OpenAI where someone could be making millions of dollars in SF. And, they're probably expecting not to make the same at a startup, but still, it can be difficult to, find cost efficient talent. So not only is it cost efficient between the coasts, but also just the time I've spent at our universities, we are putting so much time into training our students across so many different transformative fields. And I think that's just been the worry from the past. Like we're training them and we're losing them to the coast. So how do we keep and retain talent is something that's always on our mind. And it's by investing early and finding ways to keep them, because there are so many examples like Google, those guys, went to Michigan. Like imagine what that could have done for the ecosystem if they built Google, in the Midwest. YouTube, those guys went to UIUC. Imagine if YouTube was built in Chicago. PayPal Mafia, like most of those guys, went to school in the Midwest. Imagine what that would have looked like, if they stayed in the Midwest. So there are countless examples, but a lot of these folks left because historically it's just very risk averse and difficult to get early stage capital. So that's why I think pre-seed and seed play a huge part in keeping and retaining talent.
Similar to Chicago, Buffalo has a rich history of industries like manufacturing and healthcare.
Yep.
How do you envision the city leveraging its existing strengths to foster innovation and entrepreneurship, kind of diving into the opportunity of setting roots ahead of the overall plan?
Yeah. So us at Drive and many other venture firms, might say the same thing, but different versions of it. But we're looking to disrupt, legacy technologies. And I think just the strong, whether it be ag tech or manufacturing, and there are countless different industries that maybe have just looked the same for a long time, between the coasts that are all ripe for disruption. So you have, the industry expertise, you have the people who understand how these industries operate. They've been, working within them for a long time. You have the talent, from a lot of these larger Fortune 500s that might be looking for, more exciting career life or opportunities, at startups. But then also their customers too. You could sell to a lot of these older companies. So I think that's why, a lot of these older / manufacturing and just older industries really excite us because they're all ripe for disruption.
Are there other factors that Drive looks for when identifying new locations for tech hubs, or what are some of the similarities that you're seeing in the places you're putting boots down?
Yeah, I'd say like rich talent pipeline, up and coming / early venture ecosystem. So something we looked at for the hubs that we chose to start out with early is, companies that had raised a seed between the coasts and had gone on to raise 2 following rounds. And the 4 cities that we started with were just, high up on that list. But we're continuing to expand, continuing to open up new presence and offices in different cities. And, just sort of look to be like that full stack capital provider all the way throughout the life cycle of a business. And I think that can really be where we differentiate ourselves. Not only are we able to invest early and keep people here, but also like a $50 million check, which can be historically difficult to get as well between the coasts. Like we can keep people here so that they can go on and build the multi-billion-dollar businesses that stay here between the coasts and create a flywheel effect where those founders, exit and maybe go on to start new companies, or they start investing heavily into the ecosystem. Early employees start to do the same thing. I think a lot of these hubs just haven't had their flywheel moment yet, but Rome wasn't built in a day. And SF initially wasn't the first, major tech hub. Like I'd even argue Boston was before SF, but they had their flywheel effect in the 70s and 80s. And that really led to just so many great companies that we see today, spawns of companies earlier. So we need the flywheel going in these ecosystems. And I'd say like New York sort of had theirs maybe around 2010 to 2014 with like Datadog and Etsy and WeWork before WeWork crashed and burned. But, that's what a flywheel effect looks like. Yeah.
Go-to-market strategy. We were talking about this earlier, that advising founders on how they can best approach investors with the crucial and critical reason of why things need to be built today.
Totally.
And why the relevance is the biggest advantage. What do you typically tell the founders what is your approach for that?
Yeah. Distribution looks like, many different things for many different companies, but I do feel like just a lot of the early founders, we tend to meet with maybe haven't even thought at all, like, and how I want to take this to market. It first starts by like really being customer driven, like getting rich insights from speaking with folks, getting product in front of them, seeing if it, bites and seeing if it works. If it not, being able to reiterate. What I say often is like action produces information. So being able to go to an investor with like a well thought out go-to-market strategy. If the first one doesn't work, that's fine. But like just being able to say, we want to launch like this for this reason, because we spoke with X amount of people and they're all buying this software currently, or they're all saying this. Like those are the little insights and hints that we look for. But yeah, I'd say going back to the why now point, like people are not going to rush to a new product or technology if there isn't like a, major pull. Like, so there has to be a problem with a current software or tool that they're using or platform. Has to be a sense of urgency. So, and there has to be some sort of like catalytic shift. If they're okay using an iPhone today, you really need to have a strong reason why, like you want to build the next mobile phone of tomorrow. So that's what we always ask, like, why does this need to be built today? The why now? That's not something we created, but it's something that we totally, really believe in, and believe the best companies all have that why now.
I think that tactic also plays into the measuring of madness, in that a founder or company can do that from conception.
Yep.
And would you share a little bit more on that strategy?
Yes. Yeah. So something we spoke about in the fireside today was the idea of measured madness. So I'll speak to the madness portion first. We want companies and founders, I'll even say founders because we're investing so early. We want founders that are wildly ambitious, that, have big dreams for the future, because, that's aligned with our incentives. We're not looking for small returns. We want the multi-billion-dollar outcomes. We want the companies that change the world, that, the founders that leave their mark on society. So anytime, you pitch someone at Drive, or most investors, you really need to have that, that sort of thinking in mind. But I call it measured madness because you need to clearly lay out, like the milestones and KPIs that you need to hit next week, following week, next month. If we raise today, like this is what you will see before the next round. It's a milestones driven business, which is often why, we say we go after the beachhead first, similar to the military. It's like, which island are you first looking to take over before going to the next one, before going to the next one, and building bases everywhere. So yeah, I think you got founders that do one or the other. They're only thinking small, or founders are only thinking big. Like it's a balance between the both.
Another point you made earlier was that cities need cheerleaders, and you are making a great effort in doing so in Chicago. How do you find new learning opportunities, or how do you stay in tune with regional trends and what's happening? What advice can you give to make sure that a founder who's setting up shop in a city like Buffalo, what can they do to really advocate for themselves and the community they're growing?
Yeah, totally. So over and over again, like I see all of these cities, hubs between the coasts, like they're all so unique and great in their own ways. But at least I've noticed in Chicago, like, it's very humble, like, just, we don't need other people to know, like, don't let them know our secret. But, if we want to position these hubs to be, greater than they are today, not to say we have to beat Silicon Valley, but again, just build a better Chicago, build a better Buffalo. I think we really do need to be louder and more proud about what we have today, and the optimism for the future. So yeah, cities need cheerleaders. I think every city that's done it well, SF, LA, like New York, all of the major hubs, like they have cheerleaders. You have folks saying you need to build here, you need to build there. So we need more of that everywhere. And also if I'm looking to help companies, because we have companies that relocate to Chicago, if I'm looking to help them break ground in Chicago, I need to know everything that exists in that city and like the resources here, there, different, things that I can help them with, once they move to Chicago. So it's just a good exercise for me to constantly find ways to stay up to date, with innovation in Chicago, in the Midwest, in hubs like Buffalo. I was visiting Bloomington, Indiana last week. Like these hubs, just knowing what's going on there is really important. And there are a lot of resources just around the web, conversations I have, where, I pick up just a lot of cool facts. Like just visited UB today, learned about, UB's, one of the largest super computers, being in Buffalo. I didn't know UB had 30,000 enrolled students, just these facts, and also this $400 million new commitment to semiconductors. So it's just like a lot of folks just wouldn't know about things like this. So I try and share a lot of these factoids in my newsletter specifically. It's called The Driver's Seat. It's just thedrivechicago.com. And every Monday morning at 7 a.m., I share need to know insights about innovation economies, not in SF, but between the coasts.
Thank you for sharing that. We'll get into how our listeners can contact you in a little bit. You mentioned earlier too, the biggest surprise you have found through your journey is that everybody is figuring it out one day at a time, one foot in front of the other. Is there something that you are continuing to learn about yourself, or that you wish you had realized sooner? What is a thought you're sharing with founders when they're starting to find their way?
So we spoke a little bit about this off air, but I guess I can kind of, plug it. But before I got into venture, I had a podcast called In Their 20s, where I was interviewing successful people about what they did in their 20s. Venture capitalists, politicians, entrepreneurs, over 110 episodes with folks like Steve Wozniak, who co-founded Apple, Ev Williams, who co-founded Twitter, Tim Draper, David Sachs from PayPal. We had a lot of great people. This was a great way for me to meet with investors and start to build my network with a lot of VCs. But yeah, I think about this often, like I spoke with so many people, successful people, about like what they know now and that they didn't know in their 20s, back when they were not so successful. And every episode was so different. But if I were to sort of like bundle up the common pieces of advice, or like why these people succeeded, it's because they didn't fear failure. a lot of people don't start projects or they don't pursue ideas because they're fearful they're not going to work. I think that's a form of failure within itself if you don't start something. Like a lot of people talk about the cost of, doing business and starting something there's an economic risk there or a monetary risk there. There's also a risk of like just never knowing, or like a spiritual risk, I think, if you weren't to start something. So all of these folks, like maybe they were told not to start something. People are not going to want personal computers, like what, Apple was built anyway. So they broke through the noise and they didn't fear failure. And then also another point I mentioned earlier and speak about a lot, action produces information. Like it's okay not to have everything figured out. But that's the whole point of like getting into market, testing a product, seeing if something works, seeing if it doesn't work. You need to try. And then also, I think another piece of advice that I've gotten from a lot of my listeners or from a lot of my podcast guests is just, having a lot of different interests in your 20s specifically, or just always being curious. I think that's what led to a lot of my guests doing well. So that's advice that I have passed on to founders I work with today. And I still also, think about often.
That's the beauty in what you're working with at Drive and what we're doing at 43 North is finding eager, hungry founders at that early stage, specifically seed where if they have fear, they can capitalize on it and turn it into something bigger.
Positive energy. Totally.
Great. Well, you touched upon your newsletter. How else can people get in touch with you and stay up to date?
Yeah. So I'm on socials at Landon 20s, LANDON 20S. I share little pieces of my newsletter, across socials, but the driver's seat is the newsletter. I think it's a great resource for folks that just want to see what's going on in different hubs. So it's thedrivechicago.com. And then our website as well, drivecapital.com. If you're interested in, pitching us, getting in front of Drive, we have a public email on our site. We don't really have a form to fill out, but, to spend time looking at the types of companies that we invest in, reading up on different theses that our investors have and areas that they like to invest. And that's just general advice for like any founder that's looking to, get venture funding, doing your own version of diligence. We always talk about investors doing due diligence. I think many times we've had founders that it's obvious they haven't even spent 5 seconds on our website to know that we don't invest in this space, that space, when there's so much information out there. Like, I post a lot of blogs and thought pieces just on areas I'm passionate about. And I love the founders that reach out and say, hey, I read your piece on XYZ. I read your thought on this space and this trend. I want to challenge you. And like, I'm building this version of that. Or, hey, like I see you invested in this area and you were invested in this company. And you might think that my company competes with this one, but this is why it doesn't. So I think founders need to do that version of due diligence themselves, because you're potentially getting into a long relationship with an investor, and you want to make sure that you're making the right decision. This isn't a marriage. You can get divorced in a marriage. Like this is more like having a kid with someone. Like you're stuck in a way. So, I always tell founders, like, be intentional with who you take capital from.
Awesome. Well, Landon, it has been an absolute pleasure to have you in Buffalo, to have you on Latitude, and just to get your overall insights. Thank you so much for joining us.
Thank you.
I know you said you'd be back in Buffalo, so we're going to hold you to that.
Totally. Yeah. Looks like I'll be back for 10/10 days. So
okay.
Yeah, exciting.
Terrific. Well, thank you so much.
Awesome.